Hello and welcome to My Finance Teacher. Bitcoin has been going down for over a month already, and it's getting on my nerves a little bit. I would like this correction to finish relatively soon, and if you would like to see Bitcoin above, say, 15,000 over the next couple of weeks, hit the like under the video if you are on YouTube, or upvote the video on Steemit. Whatever we wish, let's have a look at history and see if that helps us to make some forecasts about the Bitcoin price. So this is the daily chart of Bitcoin on the log scale, and well, what do we see? We see some sort of regular dips happening here, 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 and again where we are at the moment, and that regular dip sort of happens all the way throughout 2017, and we can go even further back, but the most interesting part of Bitcoin's history at the moment, I think, is starts at 2017, because that's when this significant run has started, and what has been happening before that might not really correlate with what's going to happen going forward, or with what's happened in 2017. Before that, there was a bear market that brought Bitcoin all the way down from 1,000 down to 250 or something like that. So what do we see on these regular dips? Within 2017, there's a dip in mid-January, mid-March. Then what do we see? There's another dip from mid-March to second half of May. This dip is not as deep, and it didn't move as low as the 100-day moving average. This line is the 100-day moving average, but it is within the time frame that I want to mention here, so we'll count this as one of our dips. Another dip taking place in mid-June after the second half of May. Another dip happening in mid-September. After mid-September, the next one mid-November. And after that, we come to where we are at the moment. So if we have a look at these humps, they basically happen every 2 months or so. And what usually happens with these corrections that happen every couple of months is that, except for only one correction over here in May of 2017, all the other corrections have taken Bitcoin price close to or all the way down to the 100-day moving average. And we are at the 100-day moving average at the moment. Right, so looking at this, it seems that the correction we are experiencing at the moment is not out of the ordinary, which gives us hope for a continued upward trend in Bitcoin. And the alternative, of course, is entering a bear market like the one that took Bitcoin from 1,000 to 250. That is about a 75% correction. So a 75% correction from 20,000 would bring Bitcoin to 5,000 or so, which is not unlikely, I would say. So the first couple of things that we learn from historical prices is that these dips happen every couple of months, and they take the price down to 100-day moving average. Another thing that we're going to notice, I just got rid of these humps. So another thing that we're going to notice is that, with few exceptions, as in March 2017, most of these corrections take Bitcoin back down to the prior peaks. For example, this correction in September brought Bitcoin down from 5,000 all the way down to 3,000, and that is exactly where the prior peak was in June, in mid-June. Moving forward, this correction here in November brought Bitcoin down from 8,000 to about 5,500, which is not that far from where the prior peak was. And that basically happened most of the time, although not every time, in 2017. What is happening at the moment is the prior peak is all the way down at about $8,000. And the corrections so far have only taken Bitcoin down to about, what was the low here, $9,231. So above $9,200. So based on this historical performance, there is a chance that we continue moving down until we reach this $8,000 price level, at which level I think we will see a very, very strong support for the price. If that happens, that could be a really good entry point to get some more Bitcoins under your belt and see a continued upward trend. Even if the continued upward trend does not take place, even if we're entering into a bear market that will take Bitcoin, say 80% down from 20,000, we will still see a nice bounce up from this support zone at 8,000. One indication that makes this possibility sort of likely is that the price is trailing this 100-day moving average, and the longer we stay close to this price, the weaker it becomes of a support level. So the longer we stay together with this 100-day moving average, the more likely a breakdown considerably below that 100-day moving average is. Well, where can it go to? Let's have a look at where the 200-day moving average is. Right, well, if you see, the 200-day moving average is quite close to the prior peak of 8,000. That again is just another indication pointing to this possibility. The fact that many corrections took the price down to a prior peak, plus the 200-day moving average acting as a strong support, might lead to that possibility. And I'm just checking whether the corrections historically within, let's say, 2017 have taken the price all the way down to 200-day moving average or not. Right. There was an instance in March, in end of March, when the price was relatively close to that 200-day moving average. But besides that, this very strong run in 2017 hasn't really brought the price close to 200-day moving average, but that is a possibility. Right, let me switch back to a 100-day moving average and continue looking at some other indicators. Well, how long is this correction compared to the correction within this bull market? Are we already in the bear market based on the duration of this correction? Well, this has been going on since 17th of December, yes. This has been going on for about a month and a week, slightly more than that. The longest correction in 2017 was in June with the China FUD, and the correction at that time started on the 12th of June and finished on the 16th of July. So that gives it a month and a week or so. Where we are at the moment, we've just exceeded that duration slightly. So what it means is we are not that far out of the ordinary. Excuse me. And even if this correction continues for another several days, a week or so, it still does not necessarily mean we're going to enter a bear market based on the duration of this correction, because as I mentioned, we're not that far out of the ordinary, and an upward trend might continue. Alright, another thing to look at, of course, is whether the price is overbought or oversold. That's this indicator, the relative strength index. And well, again, looking at historical corrections here, 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 and here, as well as here, with the exception of this correction that happened 2 months after the previous one, with the exception of this correction that brought RSI only down to neutral levels. All other corrections have taken RSI into oversold territory or very close to it, as we see here in November, in mid-November. Several days ago, RSI was, what was the RSI at that time? Right, let me zoom in, and we see RSI at that time was at 30.31. So that was just tangent to the oversold levels. We haven't really dipped into the oversold levels as we do sometimes with these corrections, like here in mid-September, which means there is a bit of a chance that price might make the final push down before being pulled back up. However, there is also a possibility that we've finished with strong moves downward in price, given that the RSI has already been tangent to oversold levels. Well, so far we have several factors pointing to a possibility of a continued decline down to 8,000, whereas some indicators say that we might have reached the bottom at 9,200. So it's not easy to make a call, to make a decision at the moment. So let's have a look at some more indicators. Another one here is a volume oscillator. And what do we see with that is, of course, these huge spikes in price, whether spikes down or up, often takes place with spikes in this volume oscillator. These corrections, the hardest hits within these corrections happen on the spikes of these volume oscillators. And what we see is that afterwards, when all of the weak hands have already lost their bitcoins, afterwards only the hodlers are holding the bitcoins, and there is not much movement in volume, which translates to a relative stagnation in price. After a correction here in mid-September with a spike in volume, we see relative calm on the market, both on the volume and on the price. And basically this pattern takes place quite often. So we've just seen a spike in this volume oscillator, and it's likely that the market is going to take a rest for a while. In that case, what might happen to the price is it might sort of have some volatility around the price level of where we are, anywhere between 10,000 and 12,000. And after that, after that it might continue its upward trend. Actually, by then the price might meet with the 20-day moving average and cross to the upside of that 20-day moving average. And again, if we look historically, after these sort of corrections, whenever the price has closed above the 20-day moving average, that was an indication that it is safe to re-enter the Bitcoin market again. So to summarize, I would say there is maybe around 55-60% chance that Bitcoin continues down to finally retest the previous high, the prior high, close to 8,000. There is a good likelihood for that based on all of these indicators. Although there is also a good likelihood, I would say maybe 40-45% chance that we just oscillate anywhere between 10 to 12,000 and then continue moving upwards. Well, what would be a strategy in this case? Well, I would keep my cash just in case Bitcoin goes down to 8,000, and I would be buying heavily above that price because it might not actually hit 8,000 exactly, but just above that price I would be buying heavily. On the other hand, if Bitcoin closes for a day or so above the 20-day moving average, I would also consider entering the market, as often it indicates that Bitcoin continues its upward trend. Now, one would say that has already happened a couple of weeks ago here, and it didn't really work out in that case. Bitcoin came back down below the 20-day moving average. Well, I think by now, with this duration of the correction of over a month and the correction being all over the news, plus with a lot of people entering the Bitcoin market, with Coinbase having over 100,000 subscribers per day over November and December, there are a lot of weak hands, or there have been a lot of weak hands in Bitcoin prior to this correction, and a lot of them might have already sold out of their coins. So whenever we go above the 20-day moving average next time, there is a better chance compared to the previous one that it's going to stay above that level. That is all for now. Good luck in your trades. This is not investment advice. This is my opinion on what's going to happen to this asset. And subscribe on YouTube. Follow me on Steemit for more detailed and more regular updates on different sort of assets, including oil, crude oil, gold, and Bitcoin itself. Thanks for your attention.